consuming around 40% of the world's natural rubber output. China imports more than any other country in the world. It's used in a wide range of manufacturing industries, from automobiles to medical products. And it's become a hot item on the futures market since China opened the trade to overseas investors 2 years ago. That's created a number of challenges, including simply storing the raw material.
The China Materials, Storage and Transportation Corporation is the first Chinese company to have introduced advanced storage shelving for natural rubber. Natural rubber is elastic, and previously it was just stored in piles, which were dangerous because they could collapse. And it gets moist easily and can get moldy and change color. So the shelving helps ensure its quality and has also raised storage capacity and made it easier to mechanize the handling.
With this kind of support, the company was able to sell almost 660,000 tons of natural rubber during the first half of the year. Designated as a transaction warehouse operator by the Shanghai Futures Exchange, the China Materials Storage and Transportation Corporation now has around 850,000 square meters of warehousing in Shanghai for commodities like copper, aluminum, lead, zinc, rubber, screw steel, and wire materials. In a major international expansion 5 years ago, it acquired 51% of the stake in British commodities warehousing and logistics giant Henry Beth & Son Limited. That wasn't the only thing that has helped to expand China's commodities futures market.
For the daily trading in warehoused commodities, the futures exchange previously focused more on offline trading during delivery hours. It was pretty busy for the trading companies, the warehouse operations, and for the receipts operations. But with improvement in technology, more trading has been moved to online systems, and that has greatly boosted the trading volume.
The Shanghai International Energy Exchange launched its first international futures product, the yuan-denominated crude oil futures, in 2018. Trading volume topped more than 41.5 million lots last year, with turnover reaching almost 12 trillion yuan. In another expansion, the exchange introduced crude oil options for international traders in June, and further internationalization of the market is expected soon. As of now, overseas investors can put their money into only fewer than 10 domestic futures products, as foreign companies and individuals have limited access to China's vast commodity market. But the State Council has just released a statement saying that China will launch more futures contracts and accelerate the effort to bring more overseas investors into the domestic futures exchange. The country will also establish an international yuan-denominated commodity future market. China is set to speed up the establishment of a futures law, since the futures market is now one of the only financial markets in the country that lacks overall legal regulation. And that's badly needed. Last year, China surpassed all other world economies in terms of commodities futures trading value for the 11th year in a row. 张世璇 Money Talks.